All right, we are back. Thank you so much. I hope everybody had a great weekend. It's time for Be the Boss of Your Money. It's your live stream show, your post market show about personal finance, investing, the stock market, and anything to do with money, really. Mortgages, financing, interest rates, you name it. I want to cover it here. So today, big bounce in the market. Do you trust it? Do you trust this bounce? Do you feel like, wow, this is it? Where it's back to the races. Buy the down stocks. Buy the stocks that went down the most, and they're all going to come back. We're just going to be off to the races, and that you know. $400 stock you bought that's not trading at 30 is going to go right back up to 400. You'll get out scot free, and everybody will be happy. I don't think that is what happens, and I wouldn't expect it. What I would say is more than likely, this is just from an oversold bounce from the last couple of weeks. Listen, the Dow went down 8 weeks in a row. The S&P 500 went down 7 weeks in a row. We were due for a bounce, and this bounce doesn't really change that much. Just want to put it in perspective. It's nice. And although some of my favorite stocks that I look at are up $5 or $10 a share, compared to how much they're off recently, it doesn't really move the needle that much. But an up day is an up day. We should explore why, what led to it, and we should at least give it some consideration that maybe it does stick around. Maybe the bottom is in. Maybe this capitulatory day that everybody's telling you about, when everybody throws in the bath towel or throws in the towel into the ring, I don't know, whatever the expression is, everybody, or throws the baby with the bathwater. What's the expression I'm looking for? When everybody finally gives up and sells everything they have, and now the market's ready to shoot right up. I've said this before, I'll say it again. Bottoming in the market is a process. It's not some event that you just see one time. It's a process. And I also always tell you that you can't invest directly into an index, but you could invest in a security that tracks or mimics an index, right? Just have to get that in there. Let's roll the intro. Let's talk about what happened today, what it means for your money. Should you be doing anything? Should you not be doing anything? There are a few things to consider, and I'm going to give you those things to consider right now. So here we go. All right, I don't know if you're looking at me. I'm just looking at a blank screen or not. Sometimes the intro that I am looking at kind of gets stuck. So I don't know exactly when the intro closes. I kind of just have to, when it ends, I just have to take a guess and say, okay, go live. You're on the air. Okay. So just want to let you know while you're watching this, or if you're watching in replay, if you have any questions, hit me up in the comments. I love hearing from you. It's the best part of doing this. It's the most fun. It's fun. All right. So let me know what you're up to in the comments. What's your question? Words of wisdom, words of encouragement, or even correcting me if I find something I said that was incorrect. Let me know. I would enjoy the banter. All right. So far we have my friend Anthony. Okay, throw in the towel. He's giving me the proper expressions that I was that I was trying to come up with before. I'm really tired. What can I tell you? Send up the white flag. Either will work. Anthony, I can always count on you for expressions of all sorts. So thank you very much, buddy. I really appreciate it. You are like metaphor man and idiom man, idiom IDIOM in one person, in one awesome, amazing, compact human being with a cool gruff. Okay, so what the f were we talking about? Oh, we're talking about the market. Oh yeah, the market. Let's talk about the market. Let's get into it. Let's just go right to the big board here, and let me just make the screen a little bit bigger before I take you there. Do you guys have any questions? If you do have any questions, you could ask me in the comments, right? Just if you think of something you want to ask, preferably financial, investment, money related kind of question. Okay, just to make sure some of you wise guys out there just don't ask me some weird ass random shit question that has nothing to do with what we're talking about on this live stream, because some of you might do that. Okay, so let's take it to the big screen. Okay, Dow up 600 points, up almost 2%. Nasdaq up 1.59%. S&P up 1.86%. Again, these are good moves. Considering last Thursday, was it? No, it was last. Was it Thursday? The Dow, was it Wednesday, Thursday last week? The Dow was down. It was Wednesday. The Dow was down about 1,100 points, right, in one day. Um, and then we looked for some stabilization. It was down, not as much. It was down a little bit on Thursday. Friday, stocks plunged, and the excuse me, the S&P 500 officially touched bear market territory, 20% down from its all-time high. Bounced back a little bit after today. Maybe, Dow is down 17% from its all-time high, about 17%. I would have just liked to have said, let's close bear market down and gotten rid of it already, finally, just so we could stop saying we're almost in a bear market. First bear market since, the Great Recession. I would just like to finally hit a bear market. We did hit a bear market 2018, end of 2018. The last 3 months of 2018 were pretty rough. All right. Anyway, up 618 points. Nasdaq. Oh my God. Comment of a lifetime from my good friend Lori. Paula Sampson, follow Mitch. He's the best. Well, thank you kindly. Thank you very much, Laura. Paula, I love it if you'd watch the show, comment, let me know what you think. Let me know what your questions are. That would be awesome. Congratulations on your beautiful family and all those good things that have been coming your way. Yeah, so S&P up 1.86%. Gold up about 9 points. All right, 1851. We really need to see gold hit 2,000 and hold it. Oil, basically flat. 10-year yield up a drop. The VIX was down 28, down 228, down 1 point, down 3%. All right, look, let's talk about the VIX. I spoke about the VIX in a show a couple days ago. It was about VIX expiration, when futures options expire on the VIX, and it causes a little bit of volatility. And my point was, I don't think it really does that much. It's a good thing this is not like network TV, because, yawning in front of your audience is probably never a good thing. People are confounded. Like, if we're seeing like a wash, like a real bottom in the market, wouldn't the VIX be like 45, not around 30? And people are also thinking that maybe, so there's still a number of strategists out there who think inflation has peaked. It's so compelling, the argument that inflation has not peaked. And I don't know where people come up and say inflation has peaked. I don't think it has. But that it really doesn't matter. I'm still going to invest for you the same way, based on your risk tolerance, your time horizon, your financial goals. I'm going to be very careful with the money, good stewards of capital. I happen to pick exchange traded funds, okay, for the asset class exposure. I also pick individual stocks. So these things in the world, of the market, are definitely important to me, but I'm not here slinging stocks and trading back and forth. I am a long-term holder. When I buy you a stock, a client of stock, I expect to be in that stock 10 years or more. I'm not such a rush to get rid of it, which is why I'm very careful about the stocks that I get involved with in the first place. So maybe we have the end of inflation coming up. Maybe we don't. Stanley Roach used to be with Morgan Stanley. He's now with Piermont. He said it's ridiculous, this talk that we've already seen peak inflation. I don't see how inflation, the rate of inflation might go from 8 or 9% to maybe 5 or 6%. But that doesn't mean we're going back to prices a year ago or 2 years ago or 3 years ago. We're stuck with a permanently higher plateau of prices. So if prices go up 10% in 1 year, that's a lot of inflation. If they go up 0% the next year, they're still stuck here from here. That we're not getting back to that old base of prices 2 or 3 years ago. And I think that is one of the things that's testing investors' will, the will to survive, but they're testing investors' will to invest. It's the eye of the tiger, da, da, da. Right? The will to survive is in that song. I don't know. Random stuff today. Random Thoughts by Mitch Goldberg. So what else do we have here? Yeah, I'm a little bit of a wacky mood, I guess. Wacky mood. Let's look at the bond market, treasuries. Yields are up across the yield curve, which is one of the things that helped bank stocks go up. And the 10-year yield is still a good deal off its high. Interestingly, the 5-year is above the 10-year. I wouldn't say inverted yield curve, but I would definitely say a flat yield curve. But the 10-year is above 3%. I have a tough time imagining that 3% is the all-time high we're ever going to see in this cycle in interest rates. And that's why I think these bounces that we have today, like this big bounce again today, is probably a head fake, probably enough to suck a few more people in, burn them, and the market will keep doing that until finally people stop believing in it. And then we'll be at a real bottom. Crypto continues to go down. Okay. Anthony asked, wait, hold on. What's the 30-year mortgage looking like? You want to know the 30-year mortgage? I'll give you the 30-year mortgage. Da, 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 da. Hold on. 30-year mortgage right here, 5.36%. 5.36%. It's a little bit lower than 5.51%. So I'm sure somebody out there is happy they locked in their rate today, not a week and a half ago. But rates were like 3% not too long ago, if you recall. So let's get back. Where the F were we? Let's get back on track. Crypto just continues to get hit. It recovered a little bit late last week, went off a little bit today. What's unusual is that crypto is down today, even though the NASDAQ goes up. Usually if NASDAQ goes up, crypto goes up. If NASDAQ goes down, crypto goes down. So there's a little bit of a broken link today. I don't know if it's a one-day wonder or if there really is a permanently broken link. We'll have to just give it some time and see, okay? Zoom beat earnings and revenues expectations after the close. The stock is up $12 in aftermarket trading. Congratulations, Zoom. Not a bad trade. And I think anybody who bought the stock yesterday or this morning is looking really good, looking very happy. So way to go, Zoom. And another thing to take a look at are some of the big stories of the day. JP Morgan, okay, up $7 today, up 6.19%. Forget this little green thing over here. That's just aftermarket trading, okay? Costco, up $13 to $4.29. Keep in mind that stock was just $600 plus. So it's still a bargain whether if it was up or down $12 or $13 today, in my opinion. Deere down $1.53, but in the aftermarket. But let's look at this. During regular trading session, Deere was up $22. It was pounded late last week, so I'm not surprised to see it go higher. But Deere, nonetheless, a blue chip, solid industrial global company, bounced back a little bit today, and I think we're all happy about that. So let's give it up for Deere, JP Morgan, and Costco. All right. 3 important stocks that all got hit pretty hard that are on the mend. All right. So let's stop sharing the screen for a few minutes. So that's really about it. Somebody asked me in a comment. Oh, hold on a second. I don't know what the jumbo rate is. It's probably 25 basis points higher. So 5.55% maybe. That's probably what it is. Okay. But somebody asked me, what does the Fed put mean? The Federal Reserve put, like a put option. And what that means is this. The Federal Reserve uses the stock market and the housing market as barometers of wealth. So The wealth effect means that if your stock account is up a lot and your house is up a lot, you will feel wealthier. Not maybe not specifically you, but a lot of people will feel wealthier and they'll be more inclined to spend money because maybe they feel like they don't need to save as much or they're already in good shape. They could splurge a little bit. But when the stock market goes down, it could hurt the wealth effect. And Chairman Powell and before him Janet Yellen, they are concerned about the stock market going down and hurting the wealth effect and slowing spending because people feel less, if people feel less wealthy, they would spend less. So what the Federal Reserve does is whenever the market goes down, the Fed would interfere and cut interest rates. I just have to say, by the way, no, never mind. The Fed will cut interest rates and help stocks alleviate pressure. The Fed will cut interest rates and help stocks alleviate selling pressure, and stocks will go back up. So every time the market would go down, I'm talking the stock market, the Federal Reserve would raise rates and act as a buffer against market volatility. So that's what that is, and this is why the Fed has been played such an important role in this whole market and housing market. So that's what the Fed put is. Anyway, I really appreciate you guys all taking a look, watching the show. I wanted to make it a quick one today. I've just got a couple of things to do. I know you do as well. So I will be back tomorrow at 4:30. We're gonna have a good show then. Please tune in, and if you are watching this in the replay, hit me up with your questions. I'd love to see yours. And until next time.